Welcome back to Rekt Radio, the only show on Earth that sees a market dip and starts humming the Jaws theme, because we know the big whale is about to make its move. I'm Sunny, and folks, this is the kind of volatility that separates the tourists from the true believers.
And I'm Cole, here to remind you that in the movie Jaws, most of the tourists get eaten. This isn't a shakeout, Sonny. It's a tremor. It's the ground cracking before a sinkhole opens up. Let's get into the news before we all need a bigger boat.
Never, Cole. We are the boat, and it's an unsinkable rocket ship. Let's start with the price action that has everyone spooked. Bitcoin dipped, touching its lowest point in nearly 2 months, and the headlines are all doom and gloom about trader confidence being shaken.
It's not just shaken, Sonny. It's shattered. This isn't just a minor dip. It's a significant break in momentum that's causing real damage. Look at the ETF flows, the very things you celebrated as the arrival of institutional capital. Over $1 billion has been pulled out of the spot Bitcoin ETFs in just over a week. That's not a healthy rotation. That's a retreat. The so-called smart money is running for the hills.
Wait, let me jump in here. That's because they're not the smart money. They're the new money. They're skittish. This is a classic textbook bull market consolidation. It's designed to flush out over-leveraged positions and weak hands. You need these kinds of pullbacks to build a sustainable foundation for the next major leg up. The analysis I'm seeing shows the bull market structure is perfectly intact as long as we hold that critical $60,000 support zone. This isn't a crisis, it's a sale. It's the market offering a discount to anyone who is smart enough to keep some powder dry.
A sail on a sinking ship. You're celebrating that the water's only up to our ankles. The most concerning part of this isn't the price, it's who is selling. The data shows it's the holders who have been in for 6 to 12 months. These aren't the paper-handed day traders. These are the people who bought in last year and are now so terrified of losing their gains that they're capitulating. Their conviction has been broken. That's a massive red flag that tells you the psychology of the market has soured. The optimism is evaporating, Sonny.
But Cole, you're missing the point. While the traders are staring at their screens in terror, the most important players in the space, the builders, are making moves that scream long-term confidence. Take a look at Canaan. This isn't some software company jumping on a trend. This is one of the world's largest manufacturers of Bitcoin mining machines. They build the very infrastructure of the network. And they just announced they are officially embracing Bitcoin as a core Treasury reserve asset.
Oh, wonderful. So the company whose entire revenue stream depends on the price of Bitcoin staying high has decided to tie its corporate treasury to the price of Bitcoin. This isn't a voter confidence, Sonny. It's a doubling down on a single point of failure. It's an act of desperation. Their business model is already 100% exposed to Bitcoin's volatility. Now their balance sheet is too? It's like a boat builder deciding to make his life vest out of anchors. It makes no financial sense.
It makes all the sense in the world. It's the ultimate act of putting your money where your mouth is. Canaan isn't just selling the shovels for the gold rush anymore. They are now keeping the gold they mine and even buying more on the open market. Their CEO said it perfectly. They believe in its long-term value. This aligns them completely with the health of the ecosystem. It shows they're not just a hardware company. They're believers in the revolution. This is how the industrial-level foundation of the network is built, by the core players having direct, meaningful skin in the game.
Exactly. And another thing, it makes them incredibly vulnerable. What happens when the Bitcoin price has a bad quarter? Their hardware sales slump, and their treasury gets decimated at the same time. It's a death spiral. A responsible corporation is supposed to diversify its treasury to protect against risk, not concentrate it in its own highly volatile and correlated industry. This isn't a sign of strength. It's a company lashing itself to the mast in the middle of a hurricane, hoping the storm passes. It's a terrifyingly reckless strategy being dressed up as a visionary move.
It's the kind of move that will look like genius in 5 years. They see the short-term panic and are choosing to zoom out. And speaking of zooming out, let's look at what the charts are really telling us, beyond the scary headlines. When in doubt, look at the data. I've got the technicals for Bitcoin pulled up on TradingView.
Please go ahead. Dazzle me with the digital tea leaves. What story are the squiggly lines telling you today? Is the prophecy written in red or green ink?
The story is one of a titanic struggle between the past and the present, and the past is winning. If you look at the big picture, the heavy, powerful indicators of the long-term trend, the moving averages, are flashing a crystal clear, strong buy. That's the deep ocean current, Cole. It's the undeniable underlying force that dictates our ultimate direction. It tells you that the long-term health of this bull market is not just intact, it's incredibly robust.
You and your lagging indicators. It's like trying to drive a car by only looking in the rearview mirror. Yes, the road behind us was lovely and uphill, but if you'd bother to look at the dashboard, at the instruments measuring what's happening right now, you'd be terrified. The oscillators, the tools that measure real-time momentum, are flashing a sell signal. Not neutral, not weak, a sell. The engine is sputtering, the warning lights are on, and you're admiring the scenery from 10 miles back.
That's the most bullish combination you could ask for. A strong buy on the long-term trend paired with a sell on the short-term oscillators is the textbook definition of a healthy pullback. It proves my point. The powerful underlying uptrend is confirmed while the short-term speculative froth is being washed out. The market is cleansing itself of the weak hands the oscillators are tracking. This divergence isn't a warning. It's a coiled spring being loaded with energy. This is what you want to see before the next explosive move higher.
It's the definition of a bull trap. The overall summary on TradingView is neutral for a reason. The market is at a dead stop, paralyzed by the conflict between fading memories and a grim reality. The buyers are exhausted. The sell signal on the oscillators is telling you that the sellers are in control right now. You see a coiled spring, I see a trapdoor about to swing open. That strong buy is the bait, and the sell signal is the hook.
That's all for this episode of Rekt Radio. Don't let the fearmongers scare you out of a generational opportunity. The market is giving you a discount, the builders are showing their conviction, and the charts are painting a picture of a healthy consolidation. The bull run is just getting started. Stay bullish.
And I'll leave you with this final thought. When the institutional money is fleeing, when corporate treasuries adopt desperate strategies, and when the real-time market momentum is screaming sell, it is not the time for optimism. It is the time for extreme caution. Don't get trapped. You've been listening to Rekt Radio.